Hi, I'm Brendan Homan, coming to you from Toowoomba, capital city of the world. Hey, quite a few of my videos over the last 12-18 months have been in relation to changes that APRA, the bank regulator, the government's regulator of the banks I should say, have been forcing on the banks in relation to investment lending. And look, some of these are in relation to increased deposits. The latest one is trying to cut down on interest-only loans. There's a whole multitude of these things happening. And look, the reason why they're implementing these changes is simply because there's too much money going into investment properties and they want to slow that down. And look, it is easy to see why there's a lot of people trying to invest into property, because it's the safest asset class. The share market seems to be all over the place at the moment, and not a lot of reliability, and also in a lot of situations not a lot of security. It's quite volatile, and if you're looking at cash investment, that's like term deposits in the bank, a lot of the returns are only around about 2%. So property as an investment is a very safe investment, and also offering a much better rate of return, again with more security. Now, because there is so much demand for investment properties and therefore investment loans, this has actually ended up being a really good thing for the banks, because they've sort of got a capping on how much they can do for investment loans. It means that the people who they approve the investment loans are so much stronger cases, and also a lot more profitable. They've got greater deposits. Again, restriction of interest-only loans means that they're forced to now pay down their loans. Also, they can actually charge a much higher rate of interest. Interest rates for investment loans are rising much faster, and in fact, owner-occupier rates are virtually untouched. So this makes investment lending to the banks both a better security, in that if that investor can no longer afford their loan, the bank's they've had to have higher income and whatnot, so that's probably unlikely to happen, or less likely to happen. Plus, bigger deposits and whatnot put a lot more security in there for the banks. And also, because they're charging a higher rate of interest on investment loans, basically, I guess that subsidises owner-occupiers, because they still need to keep that lending coming in. They've got to do a certain percentage of both. So they're actually it's subsidising to try and stimulate people like you who want to buy their own home. And your requirements and criteria to get a bank loan is virtually untouched. A lower rate of interest, a lower deposit requirement, and all of those sort of things. So what I suggest you do, go and talk to your finance broker. Again, you know I don't like dealing directly with the banks. You get a much better deal generally speaking to a finance broker, and I can put you in touch with a couple if you'd like a good suggestion there. Talk to your finance broker, see what you're able to do, and they will be able to guide you as far as financing and your requirements and what you're able to borrow. Hey, I'm Brendan Homan from Remax Property Shop. Have a great day.